Hi everybody, I'm Steve McDonald and this is your Investors Daily Edge midweek market update. Today's update's a little longer than usual, but I have a lot to go over, so bear with me. In focus today, the health of U.S. corporations, railroads, oil, commercial real estate, and some viewer feedback. But first, tax day is tomorrow. Yay, we get to give away more money. Make sure you send your return in on time, or the only part, and I stress the only part of the U.S. government that isn't totally dysfunctional will come and get you. And believe me, if you've never gone round and round with these folks, they come and get you. All right, let's talk about the market. There are so many mixed signals out there. Small business sentiment's dropping, weak trading volume, but we're still up 9 of the last 11 days, and we've been trending up for a long time. And even analysts are looking for reasons to explain the strong economic, or maybe I should say improving economic signals when the fiscal picture is so bleak. Lots of mixed data. It's a challenge for pros and rookies. First, to make money in this market, you must, I repeat, you must discipline yourself to separate the market from what the government is doing. I call it not allowing your political beliefs to interfere with your investing. I know it's a little cold-hearted from a patriot's point of view to say, damn the government, let's make money anyway, and I'm as much of a patriot as anybody else, but you must do this or it's going to cost you money, and here's why. U.S. corporations have tons of cash on their balance sheets. They have improved efficiencies and are poised to jump on new improving worldwide markets. There's money to be made here, folks. The government, well, let's not beat our dead horse here. They are the anchor in this equation. That's why we won't see any big improvement in the volume on the exchanges, which has been pitiful lately, and why government will be, or the growth will be muted. It's the uncertainty about the government's direction and a lack of trust in the government as a whole. U.S. corporations have run their businesses extremely well in the past few years during the past crisis. Not the autos and the banks, obviously, but large U.S. businesses. Now, they have improved efficiencies, lowered their debt, positioned themselves to capitalize on huge growth in the markets, consolidated operations, and they are ready to jump on every opportunity. They have done a superb job in a crazy, awful environment. The government, well, you know what the government's been doing. The same thing they've been doing my entire adult life, spending far more than they take in, spending more to try and fix the overspending of the past, and finding new ways to tax a system that needs at least taxes to stay at their current rate, not higher. The bottom line is this. The markets now believe that interest rates are at zero for all of 2010 and most of 2011. That's going to give us some breathing room and, for the near future, a little working room. Inflation is low, credit is improving, not great, but improving, and real growth is starting to show up. That's sales growth and earnings, real earnings growth. And there are good reasons to expect a good 2010. Not a great one, but a good one. Focus on fundamentals of businesses you like, not the noise out of Washington. It isn't easy, but it will help your bottom line. Let's hope the November elections get some balance back in Congress and there's a chance to stop the crazy spending we've seen in this Obama administration. This is going to be key to success long term. Okay, industries to watch this week. Railroads. Very good numbers coming out this week for most U.S. rail operators. Freight is up 9%, and 37% of railroads are hiring new people. Warren Buffett certainly thinks highly of them. Norfolk Southern is one of the best Norfolk Southern is one of the best run ones out there. Sorry about that. Commercial real estate. Follow the buyers here. I've said this twice before. Many REITs have really pulled in their loose ends. They have huge amounts of cash and buying potential, and they're set to buy up huge opportunities here while prices are down in the industrial and office sectors of this industry. This is a very early buying opportunity, so be ready for some ups and downs if you move on this one now. Now, I'm working on a commercial real estate recommendation for the next Sound Profits issue. This company has $6 billion in cash, has reduced their overall debt load more than they needed to, and they're getting ready to buy up a lot of great portfolios of properties out there from companies that haven't fared as well during the crunch period. It already has one of the best industrial portfolios in the business, and it's set to become the biggest and best-run REIT in the world. And we can get it at bargain prices. Take a look at this. You're going to earn just in the dividend 6 to 7 times money market rates. Oil. As I said last week, we should have a little sell-off, and we are. But I stand by my calling of $95 a barrel. As the worldwide recovery progresses, demand will explode, and we don't have the supply to keep up. Play this any way you want to. Oil companies, ETFs, it doesn't matter. This is a buying opportunity. If this thing goes below 80, you can bet I'm probably going to take a mortgage on my house and buy as much as I can. Now, we have a nice short pop in natural gas since I mentioned it last week. This is still a buy. There are also leaps available on the UNG if you want to take a little more risk. Just make sure you give yourself lots of time. Excuse me. A couple of real quick feedback questions. A member asked if I could help find a broker that non-U.S. citizens can use to trade options on U.S. exchanges. This particular person was from Ireland, and I guess from what he described in his email, there were too many restrictions over there, and he just can't do it. All right, try Options Express. You can look it up. Just search Options Express. They can do it for you, according to several broker friends of mine. I like their platform. I use it myself. And obviously, I receive nothing for this plug. I just think it's a place where you'll be able to do the options. Next, how can I project oil going to new highs and the housing market also making a comeback at the same time? The reader says, isn't this a contradiction? How can both happen? Well, you're right. Under normal circumstances, I would agree with you. But this is not a normal oil or housing/real estate market. I believe residential, commercial, and industrial real estate is undervalued on a 5-year basis, and oil demand, as I've said before, is just now beginning to show its head. Both have lots of room to run in the next year. Now, if oil gets too crazy for too long, it will slow and eventually stop growth. Not just housing, just about everything. But a spurt up and down again, as we saw a few years ago, is very likely. Last, a reader wants to know if we will have the usual summer slowdown in this year's markets. I don't think there's anything usual about this market this year. Most analysts are calling this market and the economy the new reality, quote unquote. I would hesitate to make any guess at something as short as the summer market. I don't think we're even going to know there was a summer as far as this market's concerned. As I said earlier, stick with fundamentals, avoid the noise from television talking heads and Washington. Okay, the Slap in the Face Award this week is a rather somber one. It goes out to the pilot of the airplane that had the Polish president and many members of the Polish government and military on board. It crashed and everybody on board was killed. I was a Navy pilot way back when in my younger, crazier years. And as a pilot, I just can't believe that another pilot would be so stupid as to risk trying to land at an airport that was clearly below his weather minimums. 4 times he came around, tried to land that plane in that weather. Even after being directed by the tower to land at his alternate airport, he still tried. This was insane. I grew up in a coal mining town where there were lots of Polish immigrants and first-generation Poles. Many of my friends spoke Polish at home. The Poles are a tough, resilient, wonderful people who have had a history that is so tragic in so many ways. They just didn't need this. This was completely avoidable and unnecessary. There was a mural at Naval Air Station Pensacola. That's the cradle of naval aviation. It was in one of the administration buildings, and below it was a saying that said, there are old pilots and there are bold pilots, but there are no old, bold pilots. It's too bad the bold ones take so many of their passengers with them. Friday, our guest is Andy Gordon on the Weekend Wrap-Up video. He'll be talking about how to increase your income by 6 and 7 times over money markets and savings accounts. For everybody here at Investors Daily Edge, I'm Steve McDonald. We'll see you next Friday.